Welcome back, everyone, from lunch. We are very excited to have this panel that's obviously going to talk about Invesco QQQ. But as this is right after lunch, we want to get some engagement. We know the food coma is kicking in, so we're going to start off with a few poll questions. The screen will show the QR code. If you can please scan it and answer the poll questions, and then we'll begin. So obviously, Invesco QQQ is the main sponsor of this event. For those that don't know, the QQQ tracks the Nasdaq 100 ex-financial stocks by market cap, so the likes of NVIDIA, Apple. And what you may not know is the triple Qs have actually almost doubled the returns of the S&P 500 since its inception in 1999. So if you're looking for a stock that has phenomenal returns, this could be one of them. My name is Rebecca. I am head of the funds research team at Bloomberg Intelligence, which means I breathe, eat, sleep funds. So QQQ is very dear to my heart. We love it. It's done very, very well. But in terms of QQQ, it tracks, it has roughly 400 billion in assets under management. So as you guys do the polls, let's see. Do you invest into Qs? 56% of you guys said no. So Tom, you have a lot of work to do. We're hoping in the next 10 minutes we can convince you on why QQQ may be needed in your portfolio. But let's see the next question. This one was a little bit trickier. And the next question is about the holdings inside the Q. Which stock has the largest weighting in QQQ? And so let's see if you guys know the answer. But while they're doing the poll, Tom, tell us one interesting fact about Qs that you love.
Yeah, I mean, you've gone down the performance stuff, right? So since it's launched 25 years ago, it's doubled the performance of the S&P 500. The S&P 500 is a pretty robust index. If you look at some of the reasons behind that, you know, strong fundamentals from earnings growth, sales, dividends, a lot more than, you know, other growth peers like the Russell 1000, S&P 500 again. And the reason why I strongly believe that is the case is the companies within the Nasdaq 100 have this continual ability to reinvent themselves through reinvesting in themselves. And they do that through research and development and driving new technologies. They don't just do that for the sake of earnings results next quarter. They do that for 5, 10, 15 years worth of business diversification. And when you're looking at these 100 stocks, the business lines within these companies are so diverse and so broad these days. They really are at the cutting end of new technologies that are available out there in the market today and improving consumer lives.
So if we look at the polls, this audience is very sophisticated. You guys got the right answer. So the largest weighting in QQQ is Microsoft at 8.69%, followed by NVIDIA at just 8.6. So only 9 basis points difference. So well done to the audience. Everyone here has heard about the Qs, if not hasn't invested yet. So a few interesting stats about the QQQ is that it is 40% Mag 7. So oftentimes people do think of the Qs as the tech stock to invest into, but what you may not know is that beyond the tech, it's actually 15% communications, 10% healthcare, and 10% consumer discretionary. So there is a lot more than just tech in there. So in terms of liquidity, Tom, it is the second most liquid ETF globally after SPY, and year to date, it has brought in more than 20 billion in assets under management. So obviously a very, very liquid ETF, Tom. When you think of the Qs and its liquidity, what do you think of?
Yeah, I mean, there are multiple ETFs tracking the Nasdaq 100, and to be very clear, we're not making active decisions. Our role as the asset manager is to track that as efficiently as possible. You know, what we say at Invesco is there are multiple Nasdaq 100s available, but you know, there are all limitations compared to the size, scale, and liquidity, you know, of the Qs. And really, the surrounding liquidity of that is driven by derivatives, options, and now it's available in Asia hours on the Hong Kong exchange under 3455. So it's another sort of extension of the story of what of the liquidity that it's bringing to investors to invest into that Nasdaq 100 and growth innovation theme.
But I think when I was doing research for this panel, the Qs are so liquid just right after the SPY. And so as Tom said, you know, there's futures, there's options, there's derivatives. And now that it's offered in Hong Kong, it just listed earlier this year in February under the ticker of 3455. You now have the option to trade in Asia or in the US. As we think of, you know, liquidity, it's very, very liquid, Tom. Do you have any thoughts around whether an investor should trade during Asian hours or during US hours? And something that you may not know is that Nasdaq is actually from 2026, pending SEC approval, it will actually be open 24 hours. So the Nasdaq Stock Exchange now is going to have 24 hours trading. So Tom, where should they go?
Yeah, I mean, the Nasdaq might be open for 24 hours, but I don't think you'll be able to trade renminbi, for example, on the Nasdaq in the US very time soon. But we have multiple different trading counters, and again, that's because clients have asked us for that. So people are looking to interact live on the screen in a regulated market during Asia hours. Before our listing, we have multiple users of the Nasdaq 100 already and QQQ in Asia. A lot of the MPF funds in Hong Kong, for example, it's been registered under ITCIS for a very long time, have been using that to interact with the Nasdaq 100 investment universe. Now it's available in Hong Kong dollars. It's another great use case for those investors that aren't looking to trade out of their Hong Kong dollar local currency and pay the FX charges. So again, it's just bringing more use cases to more people by bringing it to Hong Kong.
And then if we go into the fungibility, you mentioned it is fungible across Hong Kong. There's no difference in buying Hong Kong versus US. What are some of the flows that you're seeing from investors around the region?
Yeah, I mean, interestingly, you type in Invesco QQQ into your brokerages platforms, Futu, Interactive Brokers, so on and so forth, to name but a few. You will go to the US site. So, naturally, we're starting to see an increase of Hong Kong DTC holders, since our launch over here. But we're starting to now get that pickup on the local listings here in 3455. We launched it at a pretty difficult time. It was literally the last peak of the market, so you can never time markets, so never believe that. But we're starting to now see that increased volume, and investors are using that as a liquidity buffer in their portfolios during Asia hours. It's trading 5 to 10 basis points at screen, so pretty much identical levels as you would get in the US as well. So. Yeah, it's a great benefit for investors' portfolios to have it in local currency and local time zones.
I think one thing that I love is that as Asian investors, they often have a global portfolio where they'll allocate to the US, to Europe, to APAC. And so now they have this product that they can trade during Hong Kong's hour, but also during US hours. So if it's one thing you want investors to know about the QQQs, what is it, Tom?
Look, I think in today's volatile times, and no one's really certain about the short term, I think it's never been so important to invest in longer term and longer term innovation. And as I said pretty much at the top of this panel, these companies have been reinventing themselves for the last 10, 15 years. Take a great example about cloud computing, for example. So cloud computing in the last 3 years has really sort of been accredited to earnings at Amazon, at Google. If you look at Google, they mentioned cloud computing for the first time in 2007, 2008. It's taken 15 years for them to really start to generate accredited fundamentals that are additive to share price. We're going to see the same thing happen with AI. We've sort of just gone through the social interaction of AI currently at the moment. What's super exciting is where does that spread into? How does that affect robotics, pharma, healthcare? How does that affect communications going forwards? So the multi-sectoral dimension of QQQ will continue to drive performance when it comes to these companies.
I think if we look at the Mag 7 names, a lot of times people don't realize that a lot of these companies are more than just one company. My colleague, Eric, in the US uses, these Mag 7 companies actually owns 50 companies. So for instance, Amazon owns Whole Food, which is a supermarket. Google owns YouTube, which is an internet provider, internet search company. Microsoft owns LinkedIn. Meta owns Instagram. So it's a lot more than just those companies. So in terms of the R&D that they spend, it's phenomenal. You were sharing a stat about patents of these companies. Do you want to share it again? It's quite an interesting stat I found.
Yeah, so if you look back at 2024, 67 of the companies within the Nasdaq 100 filed one or more patents across 35 different disruptive technologies. So again, anything from the Internet of Things, cybersecurity, robotics, AI, and actually within AI, if you look at natural language processing, 45% of all global patents that were filed for natural language processing in 2024 were from Nasdaq 100 companies. Again, these investments have been going for a while. You don't just invest in don't just invest in that research and development for a patent the following year. It's a 5 to 10 year project to get to that patent, to get to that live, and then it become accredited at earnings. So these are very much longer term investments, and hopefully that dampens out the short term volatility that some investors are facing in their portfolios today, especially in US equities.